All right, everyone, welcome. This is my stock market technical analysis channel. I'm going to go through the indices. We'll look at a couple individual stocks and trade ideas, and then we'll wrap up. So again, if you guys find value in this, hopefully you're able to make some money with the content that I'm providing, and we'll go ahead and get right into it. So we're going to start out here with the NASDAQ futures and Q. So we have what looks like another bearish rising wedge. This is just really short-term stuff. So if I roll back here, here's the last bearish rising wedge that we had. We had a sell signal. There's your breakdown sell signal right there. This to me looks like a little kickback rally, and we're going to get another breakdown to the downside. There's also some bearish divergence that's starting to show up on the futures. You can see it's just right there, where we made a slightly new high with an equal high on the RSI. So that's the hourly chart. I think we're going to break. I don't know if it happens today. Maybe they want to, maybe this continues to coil within this wedge. A lot of the time what you'll see too is they'll coil it and then they'll pop it to the upside and then reject and sell off. So again, I don't know what's going to happen. All I know is that it looks likely that we're going to continue to the downside. That's really what I see. And then going back to the NASDAQ futures, we've got a level of support, which is right about there, which is 12,406, it looks like. So a break of that would likely be, set in motion more selling pressure. SPY futures. So SPY futures are still hanging in there. You can see here on the hourly chart, we've got this trend right here. Started to make like a bearish rising wedge right there, but that's played out already. And so we've got this uptrend channel, and you want to see a break of that, an impulsive breakdown. That would be your sell signal for the SPY futures. And let's look at the SPY here. So here's this trend line that I have that really is similar to the SPY futures. And so this is the S&P 500 basically. You have an uptrend line right here. So they broke it once, recovered it, broke it again, trying to recover it. It's really choppy and whippy with it in here. So got to let this thing settle down and really pick a direction. This is when you get markets that are real whippy and they're chopping through trend lines, they can just really beat you up and fake you out. So what I typically do when I see this, if I have conviction in one direction or the other, I'll just hold my position through this chop. Now you can see here on the daily, I think we're going to go lower because we have this big negative divergence on the daily chart, telling me that momentum is dropping off and price should start to converge with that momentum to the downside. However, again, they can chop it around a little bit. What I would look for is a gap down. A gap down would be that would be an impulsive sell signal because it traps all the bullish money. So look for maybe a gap down to around 362 or so, and then we start to sell off. Oh, flipping back to the Qs real quick. So the Qs continues in this bearish rising wedge flag. Let me go to the daily just to kind of show. Sorry, it's not a bearish rising wedge, but it's a flag. You've got this bearish pattern here. This is your sell signal. So that is the signal to get short. But oftentimes when you get the signal, you get kind of a counter trend move or a kickback rally that is really meant to, wash out anybody who took the short, even though it might be the real move. So there's your sell signal, counter trend move. It's about run its course. We could pop it up to the top of this area, 308, right around 308. But then I think it should reject somewhere right around there. Looking at the hourly, we're just kind of flagging out. And so again, I think we probably, work our way down to the bottom of the flag and then ultimately break that. I would look for a break of these lows as well. 298.55 would be, well, it's actually, it's about, it's a little lower actually. It's about 298.40, or you could just take it down to the very low right here, this reaction low, just to be safe, at about 298. A break of 298 should really start to bring this thing down. We'll get rid of that one. And I think the next level of support's about this 293.50, it looks like. So Break at 298, heading down to 293, and we'll just continue to see how this thing plays out. I mean, we have the sell signal, we have negative divergence. If I go to the daily here, negative divergence, we have a sell signal and a break of trendline support. So we have all the technical things that we need to see. We also have a PPO crossover, bearish crossover right there. So we have all the technical things that we need to see. Now we just need to start to see price, work its way lower. A development that's just taken place now on the IWM. So this is your small cap ETF. We now have negative divergence. It's not fully confirmed, but we do have it. So you can see here on the RSI, let me zoom in. There's your momentum starting to drop off, and you can see we're making it on a new higher price today. So new marginal high yesterday and today, and yet the momentum is starting to drop off. Also on the PPO, you can see here we get a bearish crossover. So we're crossing, saying that the momentum is starting to fade. And then looking at the hourly chart here, we have this uptrend line where it just doesn't want to quite give it up. We don't have an impulsive sell signal yet. So I'd like to see some sort of breakdown, a big red candle to put this thing in motion to the downside. I think it's coming. It looks like the charts are starting to set up that way. But until you get that sell signal, you just have to sit and watch. Or, obviously I wouldn't want to be long this because it's below this most recent trend line right here. So you don't really have trend line support anymore. I would personally, for me, I would prefer to look for that sell signal. Gold here, continues to work its way higher, and we still have that major resistance line. So if I roll out, you can see there's your downtrend right there, and we're starting to. It's really just a downtrend basically. You've got a downtrend line. This bottom one doesn't really matter, but the top one is where, we've had several reactions along here. Broke out once, which was your bull trap, and then it impulsively sold back down. So we're just continuing to work our way below that downtrend line. So trend is down in gold. But if you look at the daily, let's see what we have here on the daily. Yeah, we don't have daily, we don't have bullish divergence either in gold. So just in general, I think the trend is down in gold. Although the miners, like especially Barrett Gold, I'm starting to see signs of life in this one. This is kind of a different look. So here's Barrett Gold, and you can see here, let me zoom in. So on the daily chart, we have bullish divergence. See how momentum is moving higher, and price made a new marginal low just yesterday. This is really the setup I've been talking about for weeks, or for about 2 weeks, I think. I've been talking about this setup, saying I think this is what the chart's going to set up for, and it did. Now we don't have the bullish, we don't have a breakout yet. We don't have that impulsive buy signal. And you'd want to, it looked like you were going to get it this morning, but then it, they kind of gave it back. So here it is. Now you did get a gap up. So I guess you could call that a buy signal, because right now we have a gap up and it ran higher, but then it came back down and did a back test, and now it looks like it's just holding on this trend line. So look for this to hold. I think it will, and start to move higher. So in general, yeah, I'm bullish this. I was buying yesterday on this divergent low down here is where I was buying. And today, I added a little bit on this back test of this trend line right here. And then that's kind of all I'm going to do. I'm going to sit on this and see how it works out. To the upside, well, we have, we got some resistance right here at 23.22. That's not much resistance. We probably have a trend line. Really what I think is we get back up into the bottom of this trend line, which is about right there. This support zone that was previous support, that should be some major resistance right up there around 25.60. So from where we're at right now up to there, that is a rise of about 12%. So that would really be kind of the profit target, or a profit target. However, if you're longer term bullish, which I am, when you look at the weekly chart, you can see we're clearly in an uptrend. We're making higher lows, and higher highs. This was a higher high right here. So that signals an uptrend. So I'm longer term bullish. But again, we could come lower. I mean, obviously, when you look at the weekly, you had this weekly negative divergence, which I think has probably played out because that's what this big drop right here was. I mean, from the highs to the lows, this thing has sold off 28%. So it's not like there hasn't been a reaction. This negative divergence did work. And if you look at the daily, clear negative divergence showed up right there. There's some negative divergence, and then it continued to build. So again, you had negative divergence telling you a price drop was coming. You then got the price drop from high to the lows here of almost 30%. And now we're starting to set up with bullish divergence. So obviously we can go lower and continue to build on the bullish divergence, but it's starting to set up bullish. And I think it's likely that we're going to start the next leg higher in this Barrett Gold stock at least. Okay, this one's interesting. Zillow Group for a short. Here's what I like about it. So you have negative divergence that continues to remain intact. Now, momentum is up, so understand that. If you look here at the PPO, you can see it's turned up. So you don't have the bearish crossover confirmation on the divergence. So again, if we go much higher from here, we could burn through the divergence, but it would have to go up quite a bit, I believe, to really burn through it. So we'll see if that's likely, but we do have negative divergence. Momentum is turned up, so you want to see the momentum start to turn down, and that you could wait for the bearish crossover or some sort of an impulsive breakdown. But also, if you look at the trend line, there's your trend line on the daily chart, really going back almost to April, and we were walking up that. We broke the trend back in October. We had a back test 1, back test 2. So I just took a short position on this full back test right here, and I'm looking for some downside. So where's the first level of support on this? We'd have to probably tighten it up. It looks like we have a support shelf somewhere right in there. We can look at the hourly. Yeah, right about there at 107.70. So we'll just mark that area. It's kind of a zone, really. It could, we could find some support or some buyers step in right about there at 113.50. So again, a zone. But if that starts to sell off and makes its way down, that's a drop of 18% to there and 22% to that one. So there's a trade idea. GM, for anyone that stayed short on this one, this is the area that I would be covering my trade at. Again, I got shook out of this one for a break-even trade. So I covered my trade right here. Just bad timing, basically. It happens. And then the thing dropped off exactly like I thought it was going to. They just tricked me when the market was selling off and GM held in there and the price action just looked strong, so they got me off of it. But that dropped about 6%, 6.5% to the target. And basically there's your trend line. So that's the first area of support. This is support. I would expect this to hold. Now, if it doesn't and we get the impulsive breakdown, then you can look for this to continue lower down to this lower trend line, which right now is sitting right around the 36 area. So watch for that. But yeah, I would think there'd be some sort of a reaction here. Tesla just kind of hanging in there. Here's your support. So look for a break of that, 624.80. An impulsive breakdown of that should set this thing down to, at least down to these lows of 569.90. And then likely, if we get down there, we'll probably break and start to head lower. But as of right now, that's, need to see this 624.50 area go first, or, this trend line. And NEO, it's just chopping sideways. So, we had the sell signal. Here's your uptrend line. There's your break and sell signal, and it's continued down. And now we're just getting kind of a consolidation. But I think ultimately this works its way down to here. 33.50, maybe 34. I don't know when it's going to get there, but somewhere right in there. And then we should find the the buyers will likely step in there. And so we are, I'm continuing to stay short this one. Although I did take some profit right here at this support line. And then I added back my short up here at the top. So again, I think this goes lower. Negative divergence, the negative divergence has started to play out. So it's no longer divergent. Diverging is when the momentum is moving opposite of price. But here you can see from the high where the negative divergence started to show up right here. And this is when price was diverging, moving higher, and momentum was moving lower. But now price has started to move lower and momentum is moving lower. So everything's working. It's telling you that lower prices are coming and we're downtrending. Okay, I want to point this out. Redfin, I don't have a trade on this one, but I want to point something out. So this was a bearish setup. You can see prior to the recent price action, you had a long extended negative divergence. You can see right there on the daily, it was continuing to drop off. Momentum was going lower and price continued to move higher. You did get a sell-off, there's your reaction, and that apparently was enough to satisfy that big, long, extended negative divergence. That was a drop of about 30%, and now the negative divergence has been burned through. So the momentum has just been, this thing's pretty much gone parabolic. You can see it's just basically straight up, but you no longer have bearish negative divergence because it just made a new higher high right here. So that's bullish in general. When you burn through a negative divergence, it tells you that there's a lot more momentum there. The PPO is pointed basically straight up. So this is not an area I'd want to step in here and just buy this thing, but in general, it doesn't have a bearish setup anymore. So take that for what it's worth. So volatility here, UVXY still looks bullish to me. You've got bullish divergence right here on the daily, where you can see that the momentum is basically made an equal low and price made a new lower low right through here. So this is where the momentum made the equal low and then price made a new lower low. So that's a divergent low telling you that a trend reversal was likely, and then you got the breakout. So here's your breakout. And looks, we're just kind of hanging in there, not selling off. So in general, this still looks bullish. I think there's higher prices in volatility to come. And I would target, what I would target is a 1634. And that's a move from where we're at up about 37%. So that looks like a probable target to me. And that's what I'm looking for. Okay, Carvana. I'm going through the comments. I see someone talked about Carvana. Still short this thing. I don't see, just continues to work itself within this trend line. So there's your daily chart. And here, if we look at the hourly, here's the daily. Negative divergence still intact. All right, that's key number one. So you want to make sure that the reason that you're in a trade still remains, the technical reason. And it does. This still has a very long extended negative divergence, and it remains. The PPO has not crossed over yet, so we don't have a bearish confirmation yet. It looks like they tagged it once, they tagged it twice. It's kind of hanging in there, but it hasn't crossed over yet. So that's something to look at. And then the trend line, let's go to the hourly. You can see, they popped it a little bit, but again, when you have a trend line and you have a lot of reactions on a level, so see all the reactions that we have on this trend line, that's 5 reactions. When you have that many reactions and a lot of people are looking at it, expect they're going to pop those trend lines at least a little bit. There's stop loss orders that are set slightly above there. So you've got shorts that are in there that will cover if if you get a close or a pop above here. And so you're going to expect that kind of price action because the market makers know those orders are there and they want to run those stops. And so that is likely what's happening right now is they're just running stops. Look at the breakout. Yeah, we popped up 7% right to trendline resistance, and now we're just kind of hanging in there. It's not impulsive. It's not an impulsive breakout. There's no volume. Again, look at volume here on the daily. See the volume? Breakouts should come with volume. All right, that's one key thing that I teach in my trading course. Link is in the description below. But you want to see volume on breakouts. So if you're just marginally popping above a trend line and your technical setup is still there, then I stick with the trade. And that's what I'm continuing to do. Here's XRT, the retail sector ETF, and someone pointed this out. So I don't see anything. I don't see any trade here yet, but it could be setting up. You've got negative divergence here on the RSI on the daily chart. Also on the PPO, you've got the bearish crossover. If I zoom in here, you can see there's the crossover. So you have basically bearish technical starting to set up, but then you also have, this price channel. So there's no sell signal. And there's no break of the price channel. I've got the lower trend line down here. So I would wait personally for a break, a sell signal on that trend line before taking a trade on that. Until then, it just remains, until then, the price is up, So people say the trend is your friend, and that's true. I mean, this is the trend. It is up. But the trend indicators tell me that the trend is about to end or will be ending sometime soon. So that's what I see on that one. Here's Uber. So I had this one marked up already. This looks like a sell, and there's actually a sell signal that just triggered yesterday. So Uber, you've got bearish rising wedge here on the daily. You have a break of the wedge to the downside. You also had negative divergence right there. See the negative divergence on the RSI, and you have the bearish PPO crossover. So in general, bearish technical indicators, a bearish pattern, a bearish technical pattern, bearish rising wedge, and a sell signal triggered. So I think we go lower in Uber. Where do we go? Well, this is a likely target right here, 38.70. They might step in a little bit early, but ultimately 38.70, and that from where we're at now is a drop of about 24%. And I like that one so much, I just took a short position on it. I got it a little bit late. I would have preferred to have it right up here on the break. But again, we're close enough to the sell signal that I think it's a good risk. Risk-reward ratio is good. Okay, I'm going to wrap up here with the long-term picture of the S&P 500. But there's a couple of comments that I get a repeated comment from many subscribers saying that the Fed's printing money, they're going to continue to keep the market propped up, and as long as the Fed's printing money, the market's not going to necessarily go down. That might be true. I can't say that I know, exactly nobody knows what's going to happen in the market. All we can do is use the tools that we're given to anticipate and analyze where things are going to go, measure the probabilities, and then manage risk. But the point that I want to make is, the Fed is a reactionary institution. The Fed, this is really the last couple times the market crashed in 2018. Remember Christmas Eve day or Christmas Day was this big down day. And this is where the Fed stepped in. So the Fed steps in when you get a big drop like that. They step in to do money printing or interest rates or whatever. And then again, the COVID drop, the Fed stepped in again down here. The Fed is likely that, and it's all about probabilities. I don't know. Maybe the Fed is going to step in and do a bunch more money printing. They don't really have interest rates unless they want to go negative, which they might. But they could do more money printing programs or buying of bonds and mortgage-backed securities. But the probability that they're going to do it when the market's way up here is let's just say it's lower than where the probability of the Fed stepping in down here when the market's down here. So typically in the market, you want to put your bets on where you have the higher probability of winning in a trade is. Doesn't mean you're going to win. There's no guarantees. But in general, I would not be counting on the Fed to keep this market propped up here. So I would be looking more at the technicals and looking at what the charts are telling me versus the kind of the general fundamental thesis that the Fed is going to save the market, and keep the market propped up. Okay, so that's all I got. I'm going to get this video out, and if I see anything else interesting today, then I'll put out another video. Otherwise, I'll catch you guys on the next one. And if you're new, check out my course. It's in the link in the description below. $99 value. It's a pretty good deal, I think. And then also hit the thumbs up if you guys are finding value in the channel. I do appreciate that. I'll catch you guys on the next one.